which is India's first manufacturing sector index fund. As you must be knowing, our NFO or new fund offering is now live. The NFO opened on August 12th and is set to close on August 23rd, 2022. So, what is this fund about? Why invest in it? How to invest in it? Let's put all these questions to rest once and for all because today we have with us Hari Shyamsunder, CEO of Navi Mutual Fund. Hi, Hari. Thank you for joining us today.
Hi, Devani. Great to be here.
We're thrilled to have you in this live session. So, Hari is going to answer all your questions right here, right now. I'm going to ask you a few questions, Hari, and then we're going to take some audience questions as well.
Sure.
So, viewers, I hope you have subscribed to our Navi YouTube channel so that you can ask your questions. So, without further ado, let's get started. Um, so, Hari, right now the GDP contribution of India's manufacturing sector is about 16 to 17%. Do you see this sector contributing more in the coming decades?
Right. Okay. Thanks for the question, Devyani. So, yeah, I think if you think about the manufacturing sector in India, you're right, it's been 16, 17%, and it's been very steady. It's been almost boring, metronomic, it's going on in the same percentage for a long time. It's not changed much.
Yeah,
So there's a temptation to think that it's just going to be like this. We've heard all these things before. We know that it's always been important, but then the question then is that why are things changing, and is anything really changing?
right.
And we have a lot of hope that things are changing. Things
Correct.
are on the move here in India in the manufacturing sector, and there's good reason to believe that this time it's different. This time, India is set to break out of that 16, 17% kind of growth rate.
Mm-hmm.
And that is translated to maybe, let's say, single digit kind of growth rate. But we should
Correct.
see better times going ahead. We should start seeing it growing in double digit. It's an exciting time for manufacturing because a lot of things are coming together. I think we'll discuss a lot more about that as well
Yes.
as the conversation goes on.
Exactly. So, news reports suggest that the Indian government is really trying to boost the manufacturing sector. Can you tell our viewers what these policies are and how impactful are they going to be?
Sure. So for that, I want viewers to think about what it takes to be a manufacturing hub. What does it
Right.
mean that India is going to be a manufacturing hub? Today, let's assume that, and it is true. I mean, at least 5 years ago, we were not producing many of the things which we are consuming. Right?
Hmm.
So, and the reason is that manufacturing tends to be a bit of a chicken and egg. If you
Hmm.
don't have any manufacturing base in India,
Correct.
then it's hard for somebody to come and start creating the entire environment without
Correct.
any incentives, without any push. Then it becomes really hard for any investor or any company which is looking to set up a base. So what the government did is, of course, they announced Make in India. But Make in India was an umbrella program. What they ended up doing
Correct.
is they created a production-linked incentive scheme, which is very intelligently designed. What it did was that it incentivized investors, companies to come in and start from ground zero. Assume there's nothing in the country to support
Yeah.
that manufacturing environment. Come in, create that first block. And then on that, you grow it. As you keep growing, you get more incentives. So
Right.
companies realize the value to coming in, setting up the investment, putting in the investment, and the investment is yielding quicker rewards than it would have otherwise. So what companies have tended to do, and we've seen this in some of the sectors where this has been in place for maybe about 5 years now. I think mobile phones is something where we have seen a good amount of success now in the
Right.
in advancement and going through the chain. So what we've seen there is that, say, 5 years back, most of the mobile phones imported from China, Taiwan,
Correct.
all those, all the other countries, we didn't have anything which are produced in India. So what
Exactly.
started off was that you started off with a one little, simple kind of an assembly,
Hmm.
and now you said that okay, now that you've created a basic kind of an assembly, let's try and make something a bit more. Let's add more value in the country.
Exactly.
So we are now getting to a position where from simple assembly, we are saying, okay, let's build the display, which is a important
Exactly.
part of the mobile phone. And now
Yeah.
we're saying, now the manufacturers are saying that let's go and build semiconductors. Let's build the
Hmm.
electronic hardware underneath it. So this
Exactly.
is an example of one sector, just one sector, where this
Right.
has paid dividends so far. But now this production-linked incentive scheme spans 14 sectors, and it's got commitments of lakhs of crores of investments, and so I think that and lakhs of crores of production which is yet to come up, and that sets a good base for what is going to happen. But this is not enough for manufacturing because for any place to be a low cost manufacturer, you need our infrastructure to be great as well. You need good quality roads, you need good high quality logistics, and
Yes.
you need labor. Now we are lucky that we have labor and access to raw materials. That India has always had. But what we have struggled with is logistics, infrastructure, and the government's national infrastructure pipeline helps us do that. If we have great logistics, great roads, and we're able to move the products, the finished products from the factory gate to the markets, then you're talking about creation of India as a manufacturing base. And that's what's been happening. That's what the government is doing. As I said, the national infrastructure pipeline is one. Then the PM Gati Shakti is going to enable that to happen as well. There are
Yes.
multimodal logistics as well being created. So that's what India has been doing to incentivize manufacturing to come into India. I think the foundation is fantastic. We have, and now is the time. We're seeing the early signs of it. Capital investments are being committed. More investments are being sought. PE, VC, all of them also looking at getting a slice of the action. So it's time for the public markets also to partake in that.
I agree with you. And that's what I was going to ask you about the production linked incentive. We've already covered that. So, when we talk about competition, we know that China is considered the world's manufacturing powerhouse. And so, do you think India can ever beat China in manufacturing?
Right. So okay, so I think this needs to be put in context. So if you look at the world's manufacturing, in terms of manufacturing output for the world, China the is still the epicenter of manufacturing in the world.
Yeah.
So I think about 28 to 29% of the manufacturing output for the world is coming from China. India is 3%. India's 3% is as much as some a country like South Korea, which is 60% of our GDP, but they
Hmm.
have similar amount of manufacturing output as us.
Oh,
So
okay.
that
That's a very
points to
interesting insight.
exactly. So
Yeah.
we've got a long way to go, right? I think this is the start of a journey. We are not talking about reaching China anytime soon. Even China has
Hmm.
been built over two to three decades of rapid growth, which has happened. So I think that's we're just at the start of this incredible journey which we are on,
That's true.
and I think it's not. I don't think it's relevant even to think about overtaking China when our
Yeah.
journey can be as long as the runway looks like it's going to be.
Totally. I totally get where you're coming from 3% to scaling that big. It's going to take time, but there's a lot of hope. And I think if we're starting right now, we can see and how the government is boosting everything, there is a very high chance that manufacturing sectors grow bigger and bigger and bigger by the day. So my next question is about the fund itself. The Navi Nifty India Manufacturing Index Fund is being called India's first manufacturing sector index fund, but there are a few other mutual funds too that track the manufacturing sector. Can you please help us understand how this NFO is different from the others?
Sure, the Navi Nifty India Manufacturing Index Fund is India's first manufacturing sector index fund. What it does is it tracks the Nifty India Manufacturing Index Fund. So,
Right.
this is going to, in a sense, follow the principles which the index fund is constructed on. So, the index fund will have a certain amount of exposure to key sectors for manufacturing. We're talking about capital goods, we're talking about auto and automobiles, we're talking about chemicals, we're talking about pharmaceuticals and healthcare. So all of these are key sectors which contribute to manufacturing in the country. And what the Navi Nifty India Manufacturing Index Fund is doing is to replicate that index. And this is new for the country. There are there are other ETFs and actively managed funds, but we are staying in a place where we have seen that active funds and passive funds have done well in certain categories. We believe that following a disciplined approach through investing in this index fund, which is low cost, which is much lower cost than the other alternatives which are out there, will serve the interests of the investors well.
That's interesting. So I think my last question before we start taking audience questions is ideally sector expertise is desirable for thematic investments so that investors are able to time their investments. What, according to you, are the key things investors must consider while deciding on this investment, particularly?
Sure, sure. I think so. As we said, that this is an equity thematic fund, right? So I think there are a couple of things here. One is the theme itself. We're talking about manufacturing, and India's time for manufacturing, which has come, is what we believe as well. Buying into the theme and doing your own research definitely is one of the things which you should consider. As you have said, India has created the building blocks for getting into this manufacturing opportunity. But we have also seen that internationally as well, India is gaining acceptance as a manufacturing destination. There are reasons why India itself has emerged as a manufacturing destination as companies look to diversify the supply chains away from China and look at China plus one as a strategy. They're looking at getting into looking at newer ways. You've seen COVID disrupt supply chains to a point that you're not able to buy cars. I mean, without waiting for it for months, right? I think
Yeah,
that's shown how brittle the entire supply chain is in the world, and how
yeah,
companies need to think about how to make their supply chains more resilient. Just more ability to withstand some of these shocks which come has become so important, and India is going to play a key role in that. So buying into this theme is
hmm,
one thing definitely which investors should do. Second is equity is volatile in the end. You need
yeah,
to be able to have a long-term orientation. It's volatile in the short term, but over longer periods of time, if you look at the returns, they look a lot more stable than in the
yeah.
short term. So a long-term orientation, buying into the the theme itself, and of course, do your own homework as well, and understand what the fund is and its constituents are before investing.
Correct. I think with that, it's time to take some audience questions. I have a great question actually. What is the difference of this index fund or any other Nifty manufacturing ETF? Basically, the difference between these two.
Sure. I think, as I said before, the Navi Nifty India Manufacturing Index Fund is an index fund. So what this means is that you do not need to have a demat account opened to be able to subscribe to this. You can just go on to any of our platforms and just directly invest into them. You don't need to worry about opening a brokerage account or trying to invest through that. You can just go and directly visit any of our partner websites and directly invest, or speak to your financial advisors as well to invest. So I think that's one of the key differences between ETFs and index fund. ETFs require you to go live when the market is open and buy it through a brokerage account, while an index fund does not require you to do that. You can just buy it readily from the partner websites.
That's perfect. Thank you, Ani, for this question. Let's take the next question. Uh, Yeah. So Manoj is asking, why should we invest in Navi Mutual Fund? What precautions are in place so that it does not go to the Axis Mutual Fund?
Well, I don't want to speak about the competition, but I think it's important. I think what has happened is serious, and I think what we should assure is that this is something which we take very seriously in terms of ensuring that there are adequate controls in place. Secondly, I think what's important to note is that our index funds are deployed very with great diligence. We have strong operational procedures in place to ensure a timely deployment of the funds which are received. What this translates is that our funds end up tracking the index as closely as we can. We look at this very tightly and closely, and the controls in place to monitor this are on a daily basis. We are obsessed about the tracking errors, tracking differences of all our funds.
Mhm.
That those measures basically compare how much the index has moved and how much the fund has moved, and so we ensure that the adequate measures are in place to ensure that this does that the investors' interests are protected to the maximum.
That's correct. Another important question. I think many investors think about this before asking this. Is this a risky investment?
Right. So I think it is categorized as a high risk investment, and I think that is a function of it being the equity, an equity instrument. As I said earlier, it is definitely risky in the short term, definitely. I
Hmm.
think equity funds we've seen, in fact, just in the last month, the markets have moved up by 10%. That kind
Correct.
of, and before that, it had fallen pretty sharply, the overall broader markets. So there is this volatility which gives a bit of a risk in the near term for sure. But as I said, over longer periods of time, we have seen that equities, the returns tend to be far more stable. So what if you look at 10-year basis, if I look at what the returns have been over 10 years and
Hmm.
then keep rolling that every year, and look at how much that has moved, that moves a lot less. You will not see massive fluctuations like you've seen in the last few months, where
Correct.
where every day you open, you don't know what's happening and how much the market's going to move that day. But as I said, you need to look at this over a longer period of time, and that's when risks in equity investment uh, tend to look a lot less steep than they do in the short term. So it is risky. And second part is, of course, this is a thematic fund.
Hmm.
It is while it is diversified, in the end, this is anchored to a particular theme. We have great
Correct.
confidence in the theme. We believe that this theme is something which should endure in the coming years. And
Yeah.
there's not a theme or a sectoral kind of a thing which will have a short-term cycle. We believe this is a
Hmm.
theme which is going to play out over a longer term period.
Manufacturing is there to stay forever.
Yes,
And yeah, I believe all mutual funds are associated with risks, with market
yes.
risk specifically. So, of course, there is risk involved here, but then we need to stay invested for the longer term. Cool. So, there's another question from Pragya. What is the annual return provided by this fund over the course of the last 10 years, like what we were talking about right now?
Sure. I think we can speak about the index, which is what
Mhm.
this is going to eventually track. The fund is going to track. And the index has given 14.5% returns annualized over the last 10 years. So that's pretty healthy. It means that your money has, if you put in a lakh, it's gone to almost about 3.9 lakhs at the end of the 10 years. So that's pretty healthy returns for this index.
Totally, I think 14.5 is a very good number. Kirti has asked a question. What are the top stocks covered under the index?
Sure. I think I'll just list out the top five, and these are the facts of what is there in the index. This is, as of now, of course, the index and how indexes are constructed means that if there's a stock which is doing better, then the index ends up adopting that particular stock as well.
Mhm.
So as we stand today, Reliance Industries, Sun Pharma, Tata Steel, and M&M, that's Mahindra and Mahindra, and Maruti Suzuki are the top five stocks under this index. But as I said, the top 10 is there. It's available on the websites, and that can be tracked readily as well.
Right
But
now,
as I said,
there are about 89 companies, 79 companies.
79 companies in the index totally. So it's a well diversified index.
Correct, correct. Awesome. So there goes another question. This mutual fund is not available in Coinzeroda. Yeah, we've been getting this question, Hari. Could you please help us understand why this has happened? Why is it not available on Zeroda?
Yes, thank you for the question. I think, unfortunately, no NFOs are available on Zerodha right now or Coin right now. So,
Mm.
firstly, I think what's happened is that since July 1st, of 2022, there have been certain changes which have happened in some regulation. You not get into that, but what that
Mhm.
has meant is that Zerodha is in the process of making some changes to their website, and
Okay.
that means that right now no NFOs are open for subscription on Zerodha. So Coin Zerodha is not available right now for this or any other NFOs.
Understood. Makes sense. Ani has another question. Is this will be equal weighted index or normal like your Nifty or Bank Nifty?
No, this will not be a equal weighted index. It will be a market cap weighted index.
Okay.
But there are some limits which are being put in place to ensure that some stocks don't become too large or don't start dominating the index. As I said, this thematic. So there have been certain caps which have been put in place. So 5% is the maximum for the stock for any
Mhm.
particular stock, and for any particular sector, it's capped at 20%. But this is a market cap weighted stock. It's not a market cap weighted index, not a equal weighted index.
Great. Awesome. I think I have one question. Like manufacturing is not about traditional sectors like iron and steel and mining. Would this fund help investors to also capture the growth of emerging manufacturing sectors like electric vehicles, semiconductors, and defense?
Oh, absolutely, absolutely. I think what this sector will end up, what this fund will end up doing is that it will capture emerging themes. So, things like EVs and the semiconductors, as they grow in the country, they will end up being captured by this particular fund as well. What this has meant is that um, what this means is that as the newer companies emerge and they
Mhm.
do well and the markets reward them for the performance, the index tends to capture this performance. That's just the way index funds end up working. You capture the best of the stocks, and if certain themes are not working, it just moves out of the table. So what
Correct.
this fund does is that it looks at 300 our top 300 companies, picks the best manufacturers or the largest manufacturers among them, and then captures them in the index. So if you
Hmm.
see certain themes picking up, if you see
Yeah.
the likes of the EVs picking up and companies doing well in that theme, certain maybe automobile components, for example, which are doing well, then they come into the index and they end up they end up being a larger part of the index as they do better and better. So that's how it'll end up capturing the theme, and the themes which are not working really move out of the index. So that's what index funds do.
Great. So we are okay. There's one more question from Vinish. Why are you not providing Navi own app? I think it's we don't have it on our app right now. So yeah, I think that question needs to be taken.
Sure, it's not available on our app right now, and we hope that it will be available soon. We are working on that, I can say, but it's not available right now. Through our own app, I think we can invest through the links in our description. We have links to our various partner aggregators in the description of the video. So I'll request you to go through them, and you'll be able to readily invest through some of them.
Correct. Thank you so much, Hari. So, we are getting several questions around the expense ratio of the Navi Nifty India Manufacturing Index Fund. Let me tell our viewers that Navi Mutual Fund has proposed the expense ratio of just 0.15% for direct plan, which is the lowest in this category, and 1% for regular plan. As far as the minimum amount to invest is concerned, you can start investing with just 500 rupees in this index fund. I think that brings us to the end of this session. Thank you so much, Hari, for enlightening us with all these insights on our new fund offering. What do you like to say as closing statements?
So thank you for the to the viewers for sparing their time to listen to this conversation, and I hope we've been able to address your queries. Feel free to reach out, to write to us at mf@navi.com if there are any queries, and we'd be happy to address them at any particular point of time. So look forward to your participation.
Yes. And viewers, if you wish to invest, please find the links in the description to all our aggregator platforms like ICICI Direct, Kotak Cherry, Grow, Paytm Money, KFin, Kuvera, and IND Money. Not just that, if you want latest updates about all the mutual fund offerings and NFOs that Navi Mutual Fund has to offer, please join our Telegram channel. The link of that is also in the description box. Thanks again, and see you in another live session soon. Thanks, Hari. Goodbye, guys.